LiteFinance, the world of financial freedom.
Hello, we're starting the week with the market forecast, in which we'll discuss for all the most important events and macro data releases for the coming week. In addition to the previously mentioned, we will discuss current issues such as inflation. So if you are interested in these issues, stay with us until the end. Let's start with the inflation and the negative sentiment that prevails on the market. I already mentioned this during the previous video, and here I will expand the thought a little. So I will quickly point out that when I say market, I mean the American stock market. That's the first thing. So as we already know, inflation is constantly growing. The Fed is threatening with the interest rate hikes. The Bank of England has already raised them a bit, of course. The ECB is holding its decision for the time being, claiming that inflation will fall in the second half of this year, although they gave a signal that they could raise interest rates at the end of the year. However, they indicated that it will rather unlikely happen. Does it really matter? The situation is as follows. Many times I've said that, but I will say it again. Inflation is not a result of low interest rates, because we had such rates for many years, but it is caused by the supply shocks, lockdowns, and energy crisis, which in turn was also largely caused by restrictions and perturbations in the supply of raw materials, plus an irresponsible energy policy of various countries, but that's a different story. So, no rate hike will solve this problem. There is no correlation between raising interest rates and falling inflation. There were periods in which inflation rose when rates were raised, and also when it fell as they were lowered, and vice versa. So it cannot be clearly stated that such actions of central banks will have any effect at all. Broken supply chains are a major problem in the world, and until this is resolved, the situation will persist. It is rather simple to explain by principle of supply and demand. If the demand for products is large and there is not enough goods to meet the demand, the prices goes up. It is enough to look at the semiconductor market. Whoever has, for example, decided to buy a new car knows what I mean. What are the dates for deliveries? In addition to the situation with Skoda last year, the Czech manufacturer, Ford is currently suspending production in 8 factories due to the frequent problems with the supply of semiconductors. Further, is the ECB correct in assuming that inflation will fall in the second half of the year? I dare to say yes, because about 70% of inflation is caused by energy prices, and of course, we use much less gas in summer than in winter. It is a fact. And what would contribute to the price in drop in this period? In addition, data on gas or oil wells from the USA, which Europe also buys, even the aforementioned gas, shows more and more output. So it is a matter of time until more goods reach the market and cause prices to drop, which will translate into lower inflation, of course. The biggest obstacle on the way to stabilize the situation are the restrictions related to the prevailing against the virus. That's it in a nutshell as for the context of the whole situation. Now let's move on to the macro calendar, which for this week does not look too spectacular, to say at least. In fact, only on Thursday we have data on inflation and initial jobless claims from the US, and on Friday data on GDP in Great Britain. Now let's move on to the charts and see what we can expect on the market. Firstly, I would add to my watch list AUD CAD because of the recent information from Bank of Canada that they lowered the forecast for the GDP for upcoming years, because of which the Canadian dollar began to weaken. So here we have clearly visible inverted head and shoulders pattern, which can be a good idea to trade. We have the neckline, which when broken to the upside can be a good level for entry in long trade. Next we have EuroCAD, where price created a diamond pattern, which is a reversal pattern. The placement is very good since we are on the strong support right now, and from that moment I would look for pullbacks like it happened right now to enter the market also in long trade. Third option I would be looking at is Euro GDP, where I would like to see retracement to the 50% level. I mean this wide strong support and continuation to the upside until we reach the zone between 78.6 and 88.6, in which between is also 161.8 level, from where I would look for entry in short. Additionally, the forecast for UK's GDP data should show a contraction to the previous year's numbers, so it might be a good confirmation if we see levels are aligned with the consensus. Okay, that's all from my side for today. Thank you for watching and goodbye.